Now, the Standard Bank Group is positive about the future of Fidelity Bank, calling the bank their preferred Tier 2 in a recent report. But as we look ahead to the release of the second quarter bank earnings, how do they feel about the rest of the banking sector? We'll put that question to Muyiwa Oni, Regional Head of Equity Research at the Standard Bank Group. Muyiwa, thank you so much. Pleasure to have you on the show today.
Thank you for having me.
So where's this positivity coming from? I mean, oftentimes when we talk about the Tier 2 banks, we know they play a lot in the retail space, but we know that in terms of shocks, the Tier 1s have, better buffers compared to the Tier 2 banks. But tell us why you're confident about this particular bank.
Yeah, so I think if we compare Fidelity Bank to the other Tier 2 banks within our coverage, they seem to have far more room in terms of capital. So there's some reasonable buffer on the capital adequacy ratio point of view. If you look at their earnings outlook as well, it seems to be way more positive, and you're seeing far more better growth compared to peers. And I think in terms of, if you think about disclosure as well and reporting, so I think they're one of the first banks last year, for example, to move reporting their foreign currency positions to over 330 compared when you look at the overall sector and the Tier 2 banks as a whole. And then I think beyond beyond those factors, I would say outlook on margins as well look to be more positive. And this, I would say, is not unique to Fidelity Bank alone, but to other Tier 2 banks as well that have struggled on cost of funding point of view. So with declining interest rates, NIM outlook seems to be more positive in my view. And that's if you compare with Tier 1 banks, where I think overall their NIMs have been healthy, but if you think about what's been happening on yields on loans and also yields on
and of course the IFRS 9, I know that that has also come into effect. Has that impacted? Did you take that into consideration?
Sure, yes, we did as well. But in spite of that, the impact on capital and capital charge hasn't really been as negative as you've seen overall with the...
Okay, so since we're with the Tier 1s, I'm just going to take it quite specific. Earlier this week, Atlas Mara increased their stake in Union Bank. They went from 48% to 49% Union Bank. And I immediately called the action and I said, Muyiwa, is this a takeover? Is it a takeover? Is it a minor takeover or a major takeover?
Yeah, so I think for Atlas Mara, they've had a strong stake in Union Bank for some time. I think if you look at the overall portfolio, Union Bank seems to be one of the more better performing financial institutions. I think for them, it's more trying to increase their stake, even though you'd argue that 1% is marginal. But I think for some time now, I think it's been clear that they've always wanted to increase their position. You've seen that position grow from below 30% to over 40% now. And I suspect once opportunity comes, I won't be surprised if they continue to take that opportunity.
But what do you think about the Union Bank? I mean, their turnaround strategy and how it's reaped all this benefits. I think we've had a CFO here. I think we've had a CEO here a couple of times, and we've talked over time through that strategy, and we've actually seen that turnaround. But what are your thoughts on that?
So if you look at their numbers, I would say this year or last year and early this year, there have been some challenges on the asset quality front. So NPL ratio around 19%. I think there are a few issues that they still expect to resolve to reduce that exposure. Also, if you look at their management team, they seem to be far more transparent, I would argue, compared to where the institution is coming from. I think they clearly have lost market share, and I'd argue that it can be quite difficult as well to gain market share in an environment where you've been complacent for quite a long time.
But there is still scope for, to gain that back, is there? Yeah.
So the environment is quite competitive. It's other banks are. Other banks aren't sitting down as well.
Okay, we only have about
it's clearly competitive. And sorry,
we only have about a minute left, so I'll just take you through my last question.
Sure.
Which is, say I'm a dividend holder or I'm an investor and I'm waiting for dividends, and Q2 earnings season is here. Will I be happy or will I be sad because of the banks?
I think you will be, depending on who you're invested in.
I think you'll be happy with the Tier 1 guys.
Yes, so if you're in GTB, if you're in Zenith, I would argue that you'd see dividend.
And what about Diamond? Because they reported a loss in Q1.
So Diamond haven't paid dividend in some time.
Yeah.
And I think it's a combination of their capital. So one, trying to be as comfortable on the capital position. Earnings hasn't been as strong as well. And I'll be surprised if they pay dividend this year. Dividend wasn't paid last year. Okay. I suspect they might be auditing numbers, but auditing to capitalize, increase capital and capitalize the earnings, and not necessarily to pay out dividends.